Hello and welcome to the F&O Show on Bloomberg Quint Live, India's first digital live streaming business news service. I'm Chaturmohta. Good morning, Agam.
Good morning, Darshan. I'm Agam Vakil. Here are the headlines. Indian markets trade with steady gains ahead of February expiry. All sectoral indices trade in the green. We've seen a lot of traction in Oracle Financial Services as well as Adani Ports. Keep an eye on those companies. Jet Airways' additional 7 airplanes have been grounded after non-payment to lessors. And India's GDP growth may see a drop in the third quarter as NBFC lending and consumer demand saw moderation. A Bloomberg poll pegs the number at 6.8%.
Okay, let's see what the markets are doing at this point of time. It's managing to stay flat, but still it has a positive bias. It's up 20 points at this point of time. So traction is there. Open interest build-up is negligible. It's just 2% at this point of time. The bank Nifty is also seeing very marginal bit of open interest build-up. So that's something that we are looking at this point of time. Remember, today is the expiry as far as markets are concerned. So expect markets to be rather volatile in today's trade. The Nifty rollover at almost 48% currently. As far as where trends are being seen, you can clearly see that at this point of time, from 10,800 to 11,000 level, it's the call writers that are active, and put writers are active from 10,700 to lower level. So it seems that expiry at this point of time, the market anticipates will be between the 10,700 and 10,800 mark in trade. But nevertheless, we are above the 10,800 mark in trade. But nevertheless, if you're looking at the markets today, again, as far as open interest build-up is concerned, that's the scene that you see. Agam, anything on the stock specific side?
Yep, absolutely, Darshan. We are seeing a significant amount of traction in a lot of stocks, considering it is expiry. So we're going to see a whole host of stocks which will be moving. But at this point in time, we're seeing unwinding coming through in Oracle Financial Services, Adani Ports. Of course, well, naturally, given the fact that it is expiry, we're going to see significant unwinding too. And in terms of price movements, again, we're keeping an eye on stocks like Motherson Sumi, Ashok Leyland. Of course, in other stocks, we also have the likes of TCS, Siemens, as well as Bajaj Finserv that we are keeping an eye on as we move into today's day of trade. Darshan.
Okay, let's see which are the futures and option stocks that we will discuss with our guest today. First of all, the big stock that we want to talk about is Ashok Leyland. It actually has seen a big bounce back, seeing high open interest build up in trade today. So interesting to see how it will be ahead of the numbers. IRB Infra is the other one which is seeing a little bit of traction. Cadla is seeing traction. UPL is close to record highs now, but nevertheless the traction seems to be on the positive side. Jet Airways is down in trade and ONGC. So these are the stocks that we will discuss today. Before we get our guest on the show, here's a reminder: if you have any queries regarding futures and option market, you can call us on 02245404141 or write to us on Twitter, Facebook with the AskBQ hashtag.
And on that note, let's get in our experts for the day. We have Ashish Chaturmohta, Sanctum Wealth, and Aditya Agarwal of V2 Wealth Securities joining us on the show now. Thank you, both of you, for joining us. Ashish, I'm going to start with you. Well, the markets have been extremely mature over the last 3 to 4 sessions, holding on to levels that we weren't expecting to, and the VIX is now also falling.
Good morning, Agam. So yes, that's a good sign because, this kind of volatility, this kind of heightened tension, and despite that, and with rise in volatility, you are still seeing index hovering around this 10,800 odd levels. And if you look at the data clearly in last couple of trading sessions, there was a clear shift from 10,500 to 10,700 in terms of put writing, and market has really respected those 10,700 levels on downside, because if you look at last 2 days dip, despite a sell-off from higher levels, we didn't broke this 10,700 on downside, and now holding about 10,800. So yes, I think it might consolidate for a while, but eventually if we see a consolidation continuing between this 10,700 to 10,850 zone, then there is a very strong likelihood we might eventually give a breakout at a higher level. But definitely in a very short term, I think markets are going to remain sideways. On downside, there's a shift from 10,700 to 10,750, 760 as a support zone, and on upside upside, I think 10,850 would be a crucial level. If we cross about 10,850, then there can be a good pullback towards 10,900 to 920 zone. So that's a broad range I'm expecting at an index level, but I think it's a stock specific market, which is a trend we are witnessing. And if you look at last couple of trading sessions, there is a shift from the Rithik stocks to the Nifty Next Junior 50.
Sure,
so I think in that space you are seeing a lot of good opportunities where still despite the kind of volatility we have observed in the market, those stocks are making higher top, higher bottom formation. So I think one need to be stock specific at this juncture.
Okay, Ashish, just to follow up, the VIX is still high. I know it's come off today, but in that case, if you're expecting the markets to move sideways, would you recommend anyone to go and sell out of the money calls and puts simultaneously?
Yeah, see, short strangle can definitely be a good strategy because of high VIX. The premiums are quite high, and if we look at the broader market per se, index is not showing really that kind of move which can indicate that we can see a massive uptick or downtick. So yes, 10,700, 10,900, 10,700 puts can be written, 10,900 calls can be written.
Okay.
But one need to be very, very specific that because of rising VIX and because of the kind of tensions we have at in border level, I think one need to keep 10,950 as in stop loss on upside and 10,650 as in stop loss on downside. If these levels are broken, then one need to come out of this short strangle.
Okay.
Ashish, anything on trade for the expiry today? Any intraday trade that you could recommend?
For stocks?
For the index. If someone is looking to pay the index for expiry today, any call or put that they should buy or sell?
See, I think the going with a short strangle will make a lot of sense, or even a short straddle of 10,800 call put will make sense, because we don't expect index to really show any strong move. So I think writing both call and put of 10,800 strike of this expiry makes a lot of sense.
Okay. Right. Yeah.
Aditya, what's your view? What's the sense that you're getting? What are you telling your clients? What's your strategy?
Well, if we see broader view for market, and Nifty is trading for last 3 or 4 months, Nifty is trading in a broad range of 10,500 to 11,000, 11,100 levels. And right now, Nifty is just in the middle of the range. So from these levels, we are expecting the next few trading sessions, Nifty will continue to trade in this range, and thereafter we can see some breakout. But as of now, market is really stuck in a very broad range of 10,500 to 10,000, 11,000, 11,100, and we are not expecting that next couple of trading days, there's 1 or 2 weeks, Nifty is going to break this range. Volatility has risen because of that. Option premiums are also high. So if someone wants to trade in Nifty options, then writing options is a better strategy. Directionally, Nifty is not giving any view for next month also. For intraday, we're expecting that Nifty may see some pullback. Nifty may again retest 10,870, 875 levels. So one can buy 10,800. February expiry call options, which is currently trading around 45, 46 rupees. We're expecting that it can test 75 rupees. On lower side, one can keep a stop loss of 20.
Okay, Aditya, why don't you talk to us about your stocks then? What plays are you moving into at this point in time?
Well, if you see in FMCG space, Hindustan Unilever is one counter which has seen a decent correction in last few trading sessions. But on lower side, if we see, then 1720, 1725 is a very strong support level, and from those levels, multiple times stock has seen a good reversal. Today, again, from those support levels, we are seeing some pullback in the counter, and stock is adding some long positions. So I'm expecting that HLL can again see some good movement from these levels, and on higher side can test 1780, 1790 levels. So at current levels, it's a good buy with a stop loss of 1724. One can initiate long position in HLL. One will be a sell call in SDFC Limited. Means if we see SDFC Limited, we are continuously seeing short positions getting built up in this counter, and in yesterday's trade, stock has given a breakdown below its crucial support zone of 1850, 1855 levels, and it is close below that. And today again, we are seeing some fresh short position getting initiated in this counter. So one can short sell SDFC at current levels, or at any pullback, one can use those pullback to initiate short with a target of 1780. On higher side, my stop loss will be 1870.
What's your strategy for stocks?
Yeah, so I think a couple of names which are showing very strong traction. Within that, first of all, would be Ashok Leyland. This is one stock which is continuously making a very strong base somewhere around 80, 82 kind of zone, and now we are seeing a good breakout coming in the stock with 8-9% open interest addition. We are observing in last 2-3 trading sessions. So this is a buy with a stop below 83. On upside, I'm expecting stock to hit 94, 95 kind of zone in next 2-3 trading sessions. So that's the first buy. SRF is looking very, very promising. If you look at this stock, it has created a pole and flag formation on a technical basis, and if you look at the pattern, we have seen a massive open interest addition from 1950 to 2250, and despite such a sharp uptick, we didn't observe any major liquidation of long positions in the stock, and today that range on a higher side is getting broken out, so which clearly indicates that now fresh longs are going to get initiated above this 2250-60 mark. So I think SRF is one stock which looks promising. On downside, 2210 would be my stop loss, but since the stock has already moved up, I would like to revise my stop loss from 2210 to 2230, and upside 2350 would be a shorter term target one can expect in SRF. UPL is one name which is looking very promising. Stock is hitting a 52-week high with a very heavy open interest position. Today there is some dip in the stock, but I think around 860 this is a very good buy. 850 would be my trading stop loss, and upside I'm expecting stock to hit its all-time high zone and can target somewhere around 900 odd levels. And one more stock which I like from a long perspective is Bharat Forge. Again, this stock has seen a massive correction from its all-time high zone of almost 800 to lows of around 450, so seeing almost 40-45% erosion, and now we are seeing some base building happening in the stock with heavy open interest concentration in last 3-4 trading sessions. So Bharat Forge is also a buy. 505 would be my trading stop loss. On upside, 540 would be a short-term target in Bharat Forge as well.
It's actually curious that UPL shows up on every analyst's list, and it has been, over the past few sessions, because it's currently trading at 865. As Ashish already mentioned, that it's taking a little bit of a pullback at this point, but it is very, very strong. And that's your last 1 month move on UPL. It's up as much as nearly 13.8% now, and it continues to advance. And as a lot of other analysts have also been suggesting that there is that opportunity to buy into this particular stock on every dips. Let me take Aditya's view on UPL as well. Aditya, any contrarian view, or do you think the move is clearly on the upside given the kind of momentum UPL has seen? And in that case, what levels would you watch out for UPL?
Well, definitely view on UPL is positive. Stock has given a multi-months breakout above 830, 835 levels, and after that stock has seen a good rally. But at current levels, I won't be buying this counter. Stock has already seen a good movement, and I'm not. So risk reward ratio is not in favor of buyers from current levels. Yes, if the stock sees some correction, if it comes in the zone of 845, 850 levels, that's a good level where one can enter into long positions with a positional stop loss of 830. On higher side, I'm expecting that stock can test 900 to 910 in next few trading sessions. But yes, buying on dips would be the right strategy. At current levels, I won't recommend to initiate long positions.
The thing with UPL is that 902 probably is the all-time high for UPL. I think the counter, if we've done this thing a few days back, and you can see the video on YouTube that why the rally has happened. Basically, after the Arista acquisition, and the counter had fallen 40% ahead of the Arista acquisition, wherein a lot of concerns were there in terms of a leveraged $3 billion buyout. But the management, after the acquisition, the counter has rallied. The acquisition happened in July, so if you have a 1-year chart, you can clearly see what happened in UPL. So from July, if you see, that's the big spike mid-July. The spike happened with the Arista acquisition when the management clarified that it won't have more than $120 million of interest payment on this entire deal, and $200 million and $300 million of cost savings, as well as revenues synergies that will come in. And as of the last quarter, the acquisition was complete. So fourth quarter probably is the strongest for UPL, and the Arista numbers will come in. So on the anticipation of that, yes, UPL seems to be doing well. So that's one of the, they gave the technical and fundamental F&O reason. Right. I'm just providing the fundamental reason.
Of course.
Let's ask Aditya on Ashok Leyland also. Ashish was rather bullish on it, so we'll get that stock out of the way. Ahead of the numbers, Aditya, what's your view on Ashok Leyland?
Well, if we see Ashok Leyland stock has seen a massive correction from 170 odd levels to 77, 78 levels, and around those levels stock has a support also. So we are seeing some pullback in this counter. In this pullback, stock may probably retest 94, 95 levels, but I'm not expecting a rally beyond those levels at the current time. So if it comes around 94, 95, that would be a good level where one should book profit. But yes, from current levels, we can see some 8 to 10% up move in the counter in next few trading sessions. So at current levels also, it's a good buy with a stop loss of 84 one can buy, with a target of 90. First will be 90 and 94 will be the next target.
Okay, well, that's on Ashok Leyland, which is showing some amount of strength as it has over the previous few days. It's moved from levels of below the mark of 80 rupees per share to currently at around 86.65. That's where its spot is currently trading at. But, you know, in the related industry, let's also pull up Motherson Sumi, because this one has also been seeing some amount of strength of late. If we can actually take a look at what's happening for Motherson Sumi over the past 7 days, there has been a little bit of a spike. Rollovers currently standing at around 78%, so it's not exactly low rollovers. Traders certainly are taking their positions forward. And this is what's happened in the last 7 days. Look at that, about nearly 20% gains. And a whole host of these gains have come through the course of Friday, Monday and Tuesday. Ever since then, we have seen a little bit of, well, I would say, temperance, but on the whole, this week has turned out to be a good one for Motherson Sumi. Ashish, is this gain or strength here to stay, or do you think that you would wait for some more levels before it can move up, before you could go out and give a long call on this one?
No, I think there is a meaningful recovery which has taken place from lower levels, and you know, if you look at this names like, you know, Motherson Sumi, if they see a massive correction from 260 to almost 130, it has already eroded 50% kind of, you know, 50% from the top. So I think there is going to be a lot of buying interest at lower levels, which we have in the first round. We have already witnessed that coming from 130 to 160, and the good part is in last 3-4 trading sessions it is into a consolidation phase. So we have not seen heavy long liquidation happening after seeing such a sharp uptick. So that indicates that the buyers are holding on to this name, and at these levels it is into a consolidation phase. So which indicates that probably from here on we can see more uptick coming into Motherson Sumi, and on upside 170, 172 is something one can expect at a higher level. Now as far as downside is concerned, I think 150 strong base is there. So ideally around 155 there is a good you know, risk reward where one can initiate a long positions.
Okay. What about Ashish? What about IRB Infra? That stock has also become half from the top. At least if you take the last 8-10 trading session, you can see that most of the days the counter has had a positive close. At least last week it rallied almost 15%. So is this bounce back real, or will this be an opportunity to sell off on the position?
I think we still need more clarity as far as IRB is concerned, because we have not seen any meaningful you know, positions getting built up at lower levels. So what has happened with, you know, Motherson Sumi, we really need one that big up move and to show that there is a buyer's interest in the stock. So that first indication has come, and after that the stock is into a consolidation phase. So that's the second positive important point. But in IRB till now we have not seen that kind of massive position build up. So we need to wait for that position to get built on. As far as technical levels are concerned, I'm waiting for 136 to get broken on higher side. If that happens, I think there can be some meaningful recovery which can be witnessed in IRB, but at this juncture I think it's more of a consolidation phase.
Okay, and from there we move on to Jet Airways. In a little bit of trouble, the stock isn't seeing as much pressure today. Or actually it has, because it began the day in green, but now it's down 3%. This is after, from what we understand, 7 more planes have been grounded. This is because the company has been unable to pay the lessors. And 73% rollovers. So I'm really curious to find out where and what direction are these rollovers taking place towards. Is this towards the long or the short side? And if you actually pull up what's happened through the month of February, it's, well, you know, there's been a gradual decline in Jet Airways. It began the month of February, and at one point in time it was around the mark of 280. It's now at 217, 218 odd levels. Aditya, how are you reading rollovers on Jet Airways right now, and what is the positioning that you would suggest? If you are also suggesting fresh shorts, what levels would you watch out for?
Well, if we see Jet Airways stock is in downtrend, and every pullback in the counter is being used to initiate fresh short positions. Means today from lower levels definitely means some pullback has been seen, but overall structure has already been damaged. Until the time now stock doesn't break 240 levels and close above that, initiating long positions is not recommended. On lower side also, not 200 is a very strong support zone for the stock. So I'm expecting that stock will continue to consolidate in a range of 200 to 240, where every pullback can be used to initiate short positions. rollovers wise also, we are seeing some short rollover getting rolled, short position getting rolled over in March series. So I'm not expecting a big pullback in the counter. If there is any pullback, stock comes in the zone of 225, 230. It's a good time where one can go short, keeping a positional stop loss of 240. On lower side, 210 will be the first target and 200 will be the second target for the counter.
Okay, the other stock that we want to talk about is Cadila Healthcare. Today, it's seeing a little bit of action, pull up the stock, and it's managed to move up almost 2%, decent rollover of 65%. Aditya, Cadila Healthcare, what's your view?
Well, this stock is looking positive. After good correction, stock consolidated in a range of 305 to 325 levels, and in last 2-3 days we have seen a good pullback from lower levels. So I'm expecting that this stock can test 340, 345 levels in next few trading sessions. So any decline in this counter, if stock comes in the zone of 320, 322 level, that's a good time to initiate long positions with a stop loss of 310. On higher side, 340, 345 will be the target in Cadila.
Okay, let's pull up SRF then, and if it's possible, we can also pull up the 1-month chart, because sometime in the first week of February, this particular stock took support at its 200 daily moving average, somewhere around 1940. I'm talking about SRF, if we can actually pull that up. This is, of course, Jet Airways. I was speaking about SRF. So as I was addressing that, somewhere around the first week of February, it took support at its 200 DMA at around 1940. It's climbed since then. It's up as much as 14%, currently at 2287. And it continues to grind. Ashish, you made some observations of late.
So we had recommended in today's trading session in this SRF as a call, and I think this is a very strong breakout which is taking place on a technical formation. And as I mentioned, there's a massive amount of open interest build-up which we observed from 1950 to almost 2200 zone, and that positions has not been liquidated, which clearly indicates that now on a fresh breakout there's going to be fresh renewed buying interest which we are going to observe. According to me, the stock is positionally poised for a move towards its all-time high zone, which is around 2450 kind of levels. And as we have indicated in today's call, 2350 is a short-term target we are expecting in SRF in a very, very short-term time frame.
Okay, Aditya, apart from the stocks that we have discussed, anything interesting that you're spotting?
Well, pharma space looks quite interesting. Sun Pharma and Biocon, both these counters are looking interesting for short-term perspective. Means if we see Biocon has seen a good correction in the last few days, and after good consolidation, now we are seeing some good positive up move in the counter. So I expect that in next series, Biocon and Sun Pharma, both these stocks can see some more performance. On higher side, I'm expecting Biocon can test 665, 670 levels. So at current levels also it's a good buy with a stop loss of 6101 can buy. And similarly, we see Sun Pharma, means the stock is consolidating in a very narrow band, but for last couple of days, we are seeing some fresh long position getting initiated. 455 is the immediate resistance. If that is broken, then stock can see some decent rally. On higher side, it can test 500, 520 also. So above 455, one can initiate long in Sun Pharma with target of 500, 520. And on lower side, stop loss will be 424.
How about you, Ashish?
So yeah, apart from these names which we have discussed, I think NCC and UBL, these are the two names where we are seeing some good reasonable buying interest coming in. NCC, I think already we are witnessing good open interest addition. This is one stock where you can see a move towards 89, 90 kind of zone, and for that 83 should be kept as a trading stop loss. So this is one stock which is looking promising. UBL at a lower end is making some kind of short-term base at around 1320, 1330, and if you look at the kind of rollovers we are witnessing in United Spirits as well as UBL, there is a good amount of long rollovers which we are witnessing into the next series. So keeping this in mind, I think UBL is a buy. 1325 would be stop loss, 1420 would be a short-term target in UBL as well.
Okay. All right, guys, we've reached the end of the show. So I'm going to take a moment to thank both our experts, Ashish and Aditya, for joining us and taking us through their views. For more updates on the F&O space, you can also check our website out, bloombergquint.com, especially the futures and options pages. And on that note, it's a wrap on this edition of the F&O Show. For more news and updates, stay tuned to Bloomberg Quint Live.